Hey there, it's Jake Adams. Want to do a quick video for you here talking about estimates, extensions, and tax payments. When the tax payments are due and when the filing is due, and what exactly is an extension. So I get this question a lot from a lot of my clients because to be honest, there's not a lot of information about this, and IRS kind of shrouds this in a lot of secrecy. So I want to go ahead and open this up to you and explain exactly what's happening. So we're going to go ahead and use the current year as an example. It's 2022 and we're doing taxes for 2021. So, what happens is the IRS wants you to be paying estimates throughout the year. They want you to estimate how much your tax bill is going to be and pay that over the quarters in 2021. Now, if you have a W 2 job, which most of you don't, you're self employed, if you have a W 2, you see the tax that's being taken out of your paycheck every single pay period, right? Whether that's biweekly or monthly. So you're going to see all those tax, withholdings, and think of the withholdings as a deposit. So every time your employer through a W 2 withholds taxes, that's going as a deposit to pay for your taxes that we do and reconcile in 2022. So as self-employed people, we can decide to pay those estimates based on our profit, or we can decide not to pay those estimates and actually pay those in 2022, the year that we actually do the tax return. So strategically, I actually recommend not to pay estimates. And this sets me apart from a lot of CPAs out there because I understand about the velocity of capital and deploying capital and cash flow. And the thing is if you do not pay your estimates, that's these quarterly payments in the current year for the current year taxes, if you don't pay your estimate, the penalty is only between 1% and 2%. Now, the question I have for you is if you have the ability to take a loan, essentially, think of it as a loan. If you have the ability to take a loan at 1% or 2%, do you have the ability to make more than 1% or 2%? Right? If you have the ability to deploy that capital, whether that's increasing the advertising in your business, buying new equipment, whatever that might be, if you have the ability to do that, then the IRS and the government want you to do that. They want you to do that because what you're doing is you're stimulating the economy, you're growing jobs, you're growing businesses, and that's what they want, right? That's what they want. If you look at the tax code, there's hundreds and hundreds and hundreds, if not thousands of pages. It's all about business tax deductions because they want to grow business and real estate in the US. So, that being said, estimates only cost you 1% or 2%. So, if you have the ability to make more than 1% or 2% with your money, by all means, do not pay estimates. The other reason why you might not want to pay estimates is because once you give that money to the IRS or the Treasury, you'll never get it back, right? If you have a catastrophic medical bill or financial difficulty, you can't call the IRS and say, hey, I'm really struggling. Can I have that money back that I paid it as an estimate? They will not give it to you. No if, ands, or buts. They don't care. So once you make that payment, the money basically goes into a black hole until 2022. So let's go ahead and talk about the April 15th tax due and extension. Now, a lot of people have the misinformation or they just don't know, right? What is April 15th and why is April 15th and actually the 18th this year? Why is this day so important? What exactly do we need to do on this date? So, what is really important with the April 15th date is that we need to pay taxes. But if you don't know how much you owe in taxes, you need to make a deposit, right? You need to make a deposit of at least something. And what you're doing is when you put that money in as a deposit, then you're basically making your best guess to what you think you're going to owe when you file your taxes, right? So think of it as a deposit. Then when you actually do file your taxes, you're going to reconcile to that number. So let's just say, for instance, you think your tax bill is going to be $30,000. So you put in a deposit, which is April 15th, of $30,000. That's your deposit. Then when you go ahead and do your taxes, then let's say the tax bill comes out to $33,000. You're reconciling and actually comes out higher. Well, that means that you had an underpayment of $3,000. So if you have an underpayment, you didn't pay enough, then you'll have a balance due. Now, it's really important to know that on April 15th, the penalties start. So what that means is that the $3,000 in that example that you underpaid, you're going to pay penalties on that. And the IRS penalties are 1% per month, right? It's actually not that bad. So for every $1,000 that you have outstanding, only generates about $10 in what they call a late payment penalty, right? Because the payment is due on April 15th. So this IRS 1% a month is the late payment penalty of 1% per month. So what we need to do is decide, do I want to incur that penalty or do I want to pay more? If you pay more, that's great, right? Then what's going to happen is when you pay more in your deposit and you reconcile, and you'll get a refund. So let's say that you think your tax bill is going to be $30,000, but you paid 35 because you think, well, hey, there could be some ups and downs. So let's say you pay $35,000, and the tax bill, when we do, let's just say we file on October 15th. So if we file October 15th, we made a deposit of 35, we reconcile, or we actually do the tax return, it comes out to 33. Well, hey, you overpaid by 2,000, you'll get a refund. So what's the downside of this? Well, the downside of overpaying is that you can't use the cash inside your business. You can't invest that money. So if you have the cash, by all means, it makes sense to go ahead and pay more in your deposit because you can avoid those penalties. However, you might strategically say, well, hey, I understand that my IRS is going to cost me 10% or 1% a month, right? So if I realize that the IRS is going to charge me 1% a month, but I know I don't have that money, maybe it's on a hard money loan, maybe it's invested in a short-term capital loan, maybe I'm doing some short-term lending. If you can make more than 1% a month, you should not try to go out and try to like, collect on that debt or whatnot. Just understand that the IRS wants you to pay by April 15th. If you don't have the money, they, no harm, no foul. They don't know how much you owe until you actually do your tax return. So they're not going to start reaching out to you. They're not going to send any nasty notices or letters or anything like that until probably at the end of the year, right? They're going to wait for the year to close out, October 15th. If you don't file anything by October 15th, they're going to start reaching out saying, hey, we expected a tax return by October 15th. Why didn't we get that tax return? Then if you make the IRS upset, that's when they start mailing out letters. So if you go ahead and wait till October 15th to file and pay, just know that you have IRS at 1% a month. And this is based on the penalties, right? So the penalties start April 15th at 1% a month. So if you have the cash, it's just sitting there in cash, you don't have it invested or deployed, by all means, you could go ahead and overpay. Make sure you don't incur that 1% a month. If you don't have the cash, say, Jake, I just don't have the cash. It's invested, it's growing. I don't have it. We're short on cash flow, growing the business, whatever that might be. Then understand that you have a penalty at 1% a month. Is that good? Is that bad? It all depends, right? So if you look at that as a long-term loan or 12% a year or 12% APR, you have to look at that versus your other cost of capital. This comes into corporate finance. So if you have the ability to borrow, let's say on a HELOC or something like that at 3 or 4%, would you rather borrow at a HELOC or with 3 or 4%, or from this 3 or 4% annual versus IRS, which is 12% annual or 1% a month, right? So you can kind of see, oh, okay, I understand that if I borrow from here and I pay to here, then I can actually arbitrage the difference. And when you're arbitraging the difference, you have the ability to grow your wealth. So I hope that makes sense. And feel free to watch this video a couple times if you need it to sink in. Again, your taxes are due April 15th here on 2022. It's actually April 18th because of the holidays, and your filing is due October 15th. So do not miss these two deadlines. Understand these deadlines. You need to know what these deadlines are, how to use them in your best interest, and so that you are not so you can grow your business, but at the same time not make the IRS upset with you. This is Jake Adams, CPA. I hope this was helpful, and I'll see you on the next video.